Hi everyone and welcome to my more important analysis videos on Wednesday 12th of December with me, Rich Market Analyst at Hantec Markets. Lots of interesting moves in UK politics today. Two factors really driving markets today. You've got the fact that Theresa May is now facing a vote of confidence from her own party in the UK and in the Conservative Party, and also we've got the risk positive aspect of suggesting that China is about to or is ready to cut import tariffs on US cars from 40% to 15%, hence why the market's believing that there is traction in possibility of the Chinese US trade dispute improvement. So what we have seen is risk positive moves coming through. We've got that coming through on across the G4 Forex, equity markets all higher, S&P 500 futures higher, and the market's looking fairly positive this morning suddenly again. Will it last is the question, that remains to be seen. But what we have seen is also the dollar, which rallied yesterday, just coming off a touch today. Is this ready to be a moment at which the dollar breaks out again to the upside? We have seen treasury yields which have rebounded with this risk positive move. But you look at the fact that I suppose Brexit uncertainty is huge still. You've got uncertainty in Europe with the Italian and now potentially even French budgets as well. And these are all sort of moves that could potentially drive that dollar a little bit higher. And with risk positive, you're seeing that the dollar is reacting, or yesterday certainly reacted positively higher with that rebound in yields. A little bit less positive today on the dollar, but still we're certainly seeing these markets testing their levels again. You've got I'll talk through on dollar yen and euro dollar the implications of where we're sitting at the moment, but yeah, sterling also really are volatile moves on this Brexit situation. So what we are seeing at the moment is this risk positive outlook spreading across markets. Now, in terms of data points today, we've got the CPI data today. Yesterday we had the PPI, which was a slightly tick higher actually on the PPI, and slightly ahead of expectations, and that sort of brings us back to the focus on the US CPI today. Now that's expected to come out on a core basis, tick higher to 2.2%, headline back to 2.2%. So that'd be interesting to see how that comes out today. We're also looking at the weekly crude stocks on the EIA inventories, 3.4 million barrels of drawdown. Interesting. If that is be the case, that would be 2 weeks in a row of drawdown on the EIA inventories. And yeah, after last week's really significant drawdown. So how would that help to drive the oil price, which has rallied today? So that takes me to my chart today, FTSE 100. Now, FTSE has been sort of chopping around a bit. It's reacted higher with the improvement in risk sentiment. It could be an unwinding move, really. I think you look at these momentum indicators, all sort of unwinding back. 50 seems to be a limit on the RSI, currently at 45. Stochastics ticking higher, but it's sort of unwinding back into this overhead supply of all these lows from October, November time. So it's actually through 68.50 at the moment, but then you're looking at 69.04, which was that reaction low there on the 20th, and then sort of all these reaction lows up towards 69.65. Again, a bit of a pivot line there as well around that point. So yeah, it's an interesting sort of sequence of old lows around this point here between this 69 figure area and 69.65. So that would be the resistance overhead that we need to look out for. So we have got a rally on FTSE 100, but how long will it last is the question. So you've got hourly chart, which is unwinding. MACD lines back towards neutral, RSI as well back to a sort of 60 area. So this is an interesting moment for FTSE. Is it going to continue to rally, or is it going to just start to fall over again? Recently, the rallies have tended to come up fairly short. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.